Hey there, YouTube family. Stocks with Josh here. Happy Sunday to you guys. Hit the like for me. Say hi in the comments. I've got a lot to cover. I'm going to talk about earnings coming up this week, but I'm going to begin with some speculation regarding the Fed. I think it's really important that we understand what the Fed is going to do in the last 2 months of this year. Right now, the market is strongly speculating that the Fed is going to raise interest rates to a terminal rate of 450 to 475 basis points. We're currently sitting at 300 to 325. So basically, we're looking at a proposed rate hike of around 150 basis points. Well, that would very conveniently work out to 2 more 75 basis point rate hikes, one for November and one for December. Of course, we've got to keep into consideration that Mary Daly came out and was talking dovish and was saying that Fed Powell was contemplating not raising interest rates aggressively after November. And so the reason why we need to understand what the Fed is going to do, because the Fed is raising rates, which is dramatically affecting the bond market, which is dramatically influencing investment money. We've been watching the bond market, specifically the U.S. 10-year Treasury, because the yield has been steadily climbing. And I've pointed out to you guys before that there's actually bearish divergence on the charts, which means that even though the yield is steadily rising, which is being affected by the Fed, that the momentum of buyers has been decreasing. People are speculating that there could become a pivot, right? So right now, the reason why the markets went up this last week is that people were thinking that perhaps there's going to become a shift or a change coming. Basically, right now, the markets went up because they're anticipating some weakness in bonds. And then if you look at the dollar, which also is a pretty strong inverse indicator to stocks, the dollar has pulled back right now. It's allowing a little bit of breathing room for the stock market to go up. But every single time we've seen the dollar pull back, all we've seen is some sideways consolidation before the next big move up, which just reminds us that we're still in a risk-on environment. We've got to keep an eye on the dollar. And then we have the trifecta of signals that we have to keep an eye on. The next one is going to be the VIX. The VIX measures an environment of fear and volatility. And if we go back and we look at the VIX chart, we see that every single big recession, 2000, 2008, 2020, all of them gave us a VIX reading above 40. That preceded a capitulation event. We don't have that yet. So we know that we're not at a place of capitulation because we're in the low 30s and it's actually also been decreasing, which gives a little bit of room for stocks to go up. And then we have earnings this week ahead of us. Now we're going to be looking at a strategic swing trade at the end of this video, so stay till the end. But what I want to keep an eye on is the fact that these markets are simply not responding to earnings. That's the reason why I'm taking the time to talk to you about the rate hikes, because the only thing that is driving this market is the rate hikes, how it's affecting the bond yields, and how that's affecting the institutional investors. Basically, they're going to continue to invest in bonds and not in stocks because bonds are safe right now, they're risk off, and stocks are risk on, they're unsafe. So the question is, are we going in risk on or risk off? I'll let you guys know at the end of the video. We have some very notable earnings coming out this week. Tuesday, the 25th, we've got Coca-Cola, General Motors, which is going to affect the EV markets, Microsoft, Google, and Visa. Who do you guys think I'm talking about today out of those? And then on Wednesday, the 26th, we have Meta's earnings. I am going to give you guys a video on Meta. I think it's an interesting company and may pose some opportunity for trades before earnings. And then on Thursday, the 27th, we've got some of the big boys. We've got Apple, Amazon, Intel, and McDonald's. Companies like McDonald's will tell us a lot about what's going on with spending. And then on 28th, we've got 2 big oil companies, Exxon and Chevron. But a smaller company that you guys are aware of that we've talked about on this channel is Tall Education. I will recap and talk about Tall Education before earnings, and I will also incorporate talking about Verb and SBET. I know everybody's interested in what's going on with those 3. I will talk about them. So we're going to get into the fundamentals of Google before the earnings. And I'm just going to try to break this down. It is a little bit complex. I'm going to try to go as simple as I possibly can. And then we're going to look at the charts and what the charts tell us, because the fundamentals, the earnings of a company, and the price action in the charts are two totally different things. Before I begin, I just want to remind everybody, if you need an exchange, MooMoo is being very competitive right now. They're offering 15 stock valued at $30,000 potentially based on your deposit. If you put in $1, then you're going to get one free stock and a guaranteed $10. But if you put in a $100 deposit, you get 6 chances at stock valued at $2,000. And you guys can find me over on the MooMoo app by searching Stocks with Josh and follow my page there where we've got additional conversations going. All right, Google earnings over the last 12 months. These guys have basically made $97 billion, and that plays into our calculations. We want to figure out what Google's enterprise value is. Right now, it's sitting at $1.2 trillion. Enterprise value, also known as EV, is the total value of a company defined in terms of its financing. And what that means, it is the value of the company's share price plus their debt minus their cash. Now, you need that to determine the relative value of the business compared to other companies. For instance, the enterprise value of Apple is $2.4 trillion, twice as big as Google. The company has maintained for the last 5 years earning growth of 26% year over year, which is really good. Then their revenue has been 23% year over year. A lot of people, though, would say that Google is becoming a mature company. I'm going to look at that with you guys. And if we could then expect those earnings to begin to go lower and lower over time. So the past, nobody cares about the past. They only care about the future. And we also know that we're staring down a recession. And we know that companies are going to be doing less advertising in a recession. Hopefully, this is simple. That's because the PE is based on the enterprise value, which is the share price plus their debt minus their cash. And then you take that and you divide it by their earnings, right? So we expect that to shrink. We expect the earnings to shrink. This is why the stock has fallen in price, because people are looking at that, looking down the road at the coming recession, and they're trying to position the stock price at a fair market value for what is potentially the loss of earnings. And in addition to that, we know that Google's other businesses, like their cloud service, is basically losing money, and that also puts pressure on Google's income. All right, I want to look at a scenario with you guys, what I think is very sober, and that's if Google's earnings drop from an average of 26% growth to a recessionary environment of 18% EBITDA growth. That would give us a return of 20% year over year, perhaps over the next 5 years. Now, this means that Google is not extremely cheap. It means that they're reasonably cheap if you have that view of them as a mature company. Now, you guys know that I do not have that view of them as a mature company because I believe very heavily that their cloud service business, as well as their YouTube business, is poised for extreme growth. I believe that both of those businesses could, in the next 10 years, possibly 10x as the foundation for their growth. And as soon as we get through the recession, you've got to remember that people will begin to go back to advertising. They're not going to wait till the very end of the recession gets announced. They're going to begin to advertise 6 months before the recession is over. All right, but right now let's go into the Google charts. I gave you guys the 200-week simple moving average as a target low for Google months ago, and we still haven't hit that. We've gotten very close to it. I gave you guys that target when Google was around $110, moving up to $120, and so many people in the comment section laughed at me and said, nope, Google's not going down to that $92, but I think that we could agree that Google looks as if it's absolutely poised to go down and hit that 200-week moving average. And I just want to take us back through time on the charts. If we go back to March of 2020, not only did we hit that 200-week moving average, we hit it 4 times before moving back up. And if you go back to 2011, we spent 8 days over a 112-day window below the 200-week moving average. And then in 2010, we spent 134 days vacillating around it. And then the biggest scenario that we saw was the Great Recession of 2008. And that's when we spent around a year beneath that 200-week moving average. And at one point, for 77 days, we hit a 40% low beneath the 200-week moving average. So let's explore that for a moment. If we got the same recession as we did in 2008, which so many people love to compare the current environment to the Great Recession, in the next 3 to 6 months, could we possibly see a $56 a share Google? Now, I'm not suggesting that we're going to get a $56 share Google, but I absolutely will tell you guys that we are going to get a $92 Google. And for interesting conversation, if we did get a $56 Google, that would bring their PE to roughly down to 7, which would be an incredible price. So why do we talk about the worst case scenario? Because it absolutely is a good idea, especially when we're going into a recession, which we have no idea how deep it's going to be. We have no idea how much fear is going to come into these markets. I can just tell you guys right now that if we had another global power invade another country, i.e. China to Taiwan, that could absolutely drive us down to a fear level that we could possibly even get as low as that $58 on Google. And so the value there is to potentially get prepared. You want to have money in stocks, you want to have money in long-term investments, but you want to have some money sitting on the sidelines. That's the type of money that if you could invest in a high fear environment when all of the metrics come together, like the VIX is just up above 40. That's a great reading to then go in long on some of your favorite companies. It could open up some opportunities. I can tell you that if that day came, I would be giving you guys my option calls for Google because the opportunity would be to 2x, 3x, 4x your money. But you guys, I'm not giving you guys financial advice. I'm just sharing with you what I'm doing. This is not a suggestion to buy, sell, or hold. But let me tell you guys what I'm thinking regarding Google earnings that are coming out Tuesday. I basically intend to play any dip tomorrow. So the markets went up Thursday and Friday, and that could pose an opportunity for a little bit of retracement. If we get some retracement and some pullback on Google, I'm going to go into some options on Google. And I'm going to tell you guys up front that I'm going to take my profits on Monday. I will not be holding those options over till Tuesday. I'm simply looking at a one-day play. I'm looking for people to run it up after we go through a dip. We're likely to see a little bit of run up afterwards. I'm going to buy into some Google. I think that it'll have a little bit more momentum than other stocks because the earnings are tomorrow. And I'm going to run it up and sell it before market close, before Tuesday. We've got a lot of other interesting earnings coming out this week. I'm going to do that video on Meta for you. I'm also going to do a video on Apple. And I also am going to do a video for you guys on Tall Education, SBET, and Verb. If you guys don't want to miss my calls, then you've got to hit the subscribe. Check and see if you are subscribed. You might not be subscribed. You might think you're subscribed. Hit the subscribe and the notification bell. And as always, my friends, peace and blessings. We'll see you tomorrow.